listening to episode 175 of the WealthTech Today podcast. I'm your host, Craig Iskowitz, founder of Ezra Group Consulting. This podcast features interviews, news, and analysis on the trends and best practices all around wealth management technology. And this is our February news roundup. And we have a lot on our plate today. Hard to say that. It seems that a lot of firms are kicking off 2023 with big announcements. There are so many companies dropping press releases, it was hard to choose which ones to cover. But I did select 7 stories for the episode today, plus the usual review of changes in the Keatsis Ezra Group Advisor Tech Map, and an update on the Ezra Group Wealth Tech Integration Score. So strap in and get ready to absorb some wealth tech information. And if you are an executive of a wealth tech firm that's selling software to RIAs, broker-dealers, asset managers, TAMPs, or others, then you should run, not walk, to our website, EzraGroupLLC.com, and fill out the Get in Touch form on the homepage. Our experienced experts can deliver a wide range of advice, including competitive analysis, new product evaluation, market insights and strategy, client buying decisions, integration, development services, and more. Every vendor needs these tools to be successful, especially when entering new markets, and you can get on the right track by going to EzraGroupLLC.com. Quick housekeeping note before we continue, please subscribe to this show wherever you listen to podcasts so you don't miss an episode. And just so you know, our podcast has been doing pretty well all around the world. In the US, we've regularly been in the top 100 podcasts in fintech news. This is our category, fintech news. So top 100 in the US. We've been in top 10 in a lot of foreign countries like Ireland and Australia, even Singapore. In the UK, we're in the top 50. In most European countries, we've also cracked the top 50. So you're in good company if you're listening to this show. Now, let's kick this thing off. Okay, our first story is FNZ expanding their US footprint with YieldX acquisition. Now, some of you may not know either of these two firms that we're starting off with, so let me do a quick review. FNZ is a custodian technology provider that administers more than 1.5 trillion in assets, over 20 million investors worldwide. They have 150 wealth managers, banks, insurers, asset managers as clients in 21 countries, but mostly in the UK. And also I know we worked with those clients in the APAC region, but they have no US exposure really for the wealth management platform or custody yet. Some of the biggest competitors in the US are Schwab, Fidelity, Pershing, and some Northern Trust. FNZ has made a lot of deals the past couple of years. One of the biggest was a partnership, a joint venture with State Street, where State Street bought 20% of FNZ, and they formed a JV called FNZ Trust Company, which is now working in the US. FNZ raised $1.4 billion in 2021 on a $20 billion valuation, so they've got a lot of money in the bank. Also in 2021, FNZ acquired Appway, which is a Zurich-based workflow engine, new account opening tool, really big technology platform, lots of US clients, a lot of big broker dealers. LPL was one of them using Appway's workflow products. So that gave them a good foothold in a lot of wealth management firms. But their acquisition of YieldX is interesting. Now, YieldX is a startup, just started up in 2019. They are in the fixed income space. Now, I've done some work in fixed income. I was the head of operations for a fixed income trading software company. So I know a lot about the trading of fixed income and how difficult it is to manage that and to build software that can keep track of different bond portfolios, different bond pricing. It's not an easy task. YieldX has really done a great job of that. They've got a number of different products in a suite that allows fintechs, if you want to plug into their API-first analytics, you can create investment and savings products around targeted yield and risk parameters. They allow wealth management firms to improve client outcomes by building on their workflows to optimize the portfolios of fixed income securities. They can deliver insights, trade ideas, portfolio optimization at scale. They can build bond ladders. They've got a very strong filtering criteria capability across the fixed income landscape. A lot of very cool products here. So interesting that FNZ decided to acquire them, jump in on this, because I had expected Envestnet to acquire YieldX since also last year, 2 years ago, in October 21, YieldX and Envestnet did a partnership where Envestnet was going to distribute the YieldX technology and products through their platform. I know they had been introducing a lot of their bigger clients to YieldX. So I was really expecting some announcement from Envestnet that they would be buying them, but FNZ looks like they came in and snapped them up right out from under their nose. Although FNZ wasn't sitting still, they also have a partnership with Envestnet. So everyone's in a big circle here. FNZ Envestnet partnership, Envestnet YieldX partnership, FNZ buys YieldX. So a lot going on here. Following the acquisition, the two founders, of course, joining FNZ, Adam Green, the CEO of YieldX, now becomes the CEO of FNZ's asset management, and Steve Gross, head of sales, becomes the FNZ's head of asset management strategy. So great move for those two guys. I see this as another step in FNZ's slow migration into the US. It's a carefully orchestrated strategy. I've seen their product a number of times and talked to them a few times about their US strategy. So I imagine they're building out their platform more towards the US market, focusing on the US, what US advisors need, whether it's on compliance, trading capabilities and account opening, integrating Appway into their platform. They're going to have a very competitive offering at some point. So I would look for them, especially in the enterprise space. They're not going to be going after really small RIAs. They're going to be looking at the larger firms, either stealing business from existing clients or partnering with them. Who knows? There's a lot. FNZ has a lot of options. They're partnering with Envestnet for custody in the US. So Envestnet will be reselling their custody services, and FNZ is going to be reselling Envestnet's data analytics services overseas. So they're already working together there. So expecting to see a lot more from them. And staying with the Envestnet news, Pantera announces integration with Envestnet. So Envestnet now is working with Pantera. Pantera is we have them in the Ezra Group Keats's Advisor Tech map under rebalancing. They're really a held away asset trading tool. In the past, held away assets, you could always view them. You could see what you had, see the balances, but you couldn't do much with it. You couldn't trade on that data or access that data directly. But Pantera has built technology that allows advisory firms to actually make trades in these clients' retirement accounts. So 401k accounts, 503b, other types of retirement accounts directly. Great tech, not cheap. It's not cheap. You're going to pay for it. I think it's around 30 basis points, but that enables advisors to charge their clients for the capability of directly managing their retirement assets versus, hey, you should trade this mutual fund in this retirement fund that you've got, and expecting the client to make those trades. So another capability of Envestnet. So all these firms are building out, making more partnerships, making more opportunities for advisors to have better outcomes. Next up on the news, Zoe Financial announces its new innovative wealth platform. Zoe Financial, which is a lead gen application, has partnered with Apex FinTech Solutions to offer custody and clearing solutions as part of the platform build out. With this partnership, Zoe now offers commission-free fractional trading across most U.S. listed securities and 30,000 U.S. domiciled mutual funds. Zoe Financial is one of the most successful lead gen applications for advisors in our space. They had around 2.5 billion in assets transferred, assets referred. They call it assets under administration, but that's really not true. As a lead gen, they're bringing the assets to these advisors, but they're not administering them or managing them going forward. Zoe did have a $10 million Series A round led by SoftBank Opportunity Fund, and their team grew 3x during 2021. In 2022, Zoe was listed in Fast Company's prestigious World's Most Innovative Companies list. Now, what I like about Zoe, besides the fact that they have been delivering a good amount of leads to clients and building out a great client base, according to their statistics, 70% of the investors that Zoe refers to advisors have never used a financial advisor before. So it's really greenfield for a lot of these advisors. It's good news, bad news. Good news is they're getting brand new clients that never worked with an advisor before, so they get to deal with them first, but they're also not stealing any business from other advisors. So you can look at it either way. Also, Zoe claims that their average age of the clients they refer is 43, which is compared to the average age of 58 for clients at wirehouses. Now, this was kind of a surprise. So we follow the market obviously very closely, whether it's digital marketing or lead gen or anything else in the Keats's Ezra Group Advisor Tech map. But I've never expected a lead gen application to announce a wealth platform. Very surprised by that. It doesn't seem to fit to me. There's already too many wealth platforms out there, and offering this at this time doesn't make sense to me. They picked a great partner. I mean, we love Apex and everything they're doing, especially as another API first custodian, being able to build out these tools for a quick onboarding and commission free fractional trading. And the question is not that whether it works or not. The question is, does it fit? And as a lead gen firm, you really have no experience with a wealth platform. Most of the staff, the senior staff, haven't built wealth platforms before, so this is the first time for them. And it's more than just launching it; it's getting firms to use it. And I wrote an article a couple of years ago called "50 Portfolio Management Systems Can't All Survive." And the reason why I wrote that is there's just too many. There's too many wealth management platforms, portfolio management platforms out there, at least more than 50 now. And they can't all possibly get enough market share to stay in business because it's very difficult to change platforms. Once you've got a wealth platform, a portfolio management, rebalancing, trading application, you're going to probably stay on it for at least 10 years because it's just too difficult to change. It's a lot of effort. We've done it. Some of the things that my company, Ezra Group, does. One of our main businesses is helping firms convert their portfolio management platform, and it is not a trivial task. So for them to go in and say, hey, just put this application and give us your assets, not going to be that easy. Now, even if they're thinking of it, well, we'll just bring new assets on to the Zoe Apex platform and keep our existing assets on our current platform, well, that now gives you two platforms to manage. So you've got some of your clients in one platform. Now you're building up a new client base in a whole different wealth platform. That's confusing. Your reporting is going to be confused, is going to be a mess. Your compliance, your billing, all of it needs to be coordinated. We've done this review and this research for firms that had come to us saying, hey, can we launch another offering? We had this exact same conversation with a couple of the biggest wealth players who are already out there with wealth platforms, saying we want to launch a new offering that builds and that combines custody with onboarding and our wealth platform. Would that sell? And we said, well, no, it's not really going to sell because you need more than that. You need more of a reason for a wealth firm, whether it's an RIA aggregator, broker dealer, or others, to add a new custodian or a new wealth platform. It's just not. There's not a lot of reasons beyond bringing in some huge clients, or you're merging. That's the biggest reason why an RIA or other wealth firm will bring on another custodian is they've merged. They bought a company, they merged with a company, and the other company has a significant portion of assets on another custodian. Then just leave it. No one's going to change those. So I'm always looking for innovative ideas and new ideas. I just don't see Zoe Financial as a lead gen firm being able to build out a wealth infrastructure, or rather a client base. They already have the infrastructure through Apex, but be able to attract enough clients to make it worthwhile. Another interesting part of this story, which was on RIA Biz, Zoe Financial discloses stealth raise from big RIAs, even as it launches its own RIA and walks tightrope of potential conflicts. They always have the longest titles for their articles. Zoe Financial last May, which is 2022, they tagged 4 RIAs for a substantial raise, a funding round, without publicly disclosing it, and used the cash in part to build this in-house RIA based on Apex. They did this funding round, which they don't say how much it was, with some of the biggest RIAs in the space: Mariner Wealth, Cap Financial, Creative Planning, and Sequoia Financial, all contributed to this funding round of Zoe Financial. Now that's a major mark of, hey, we think you're doing a good job and we really like this idea. So they've got that backing. Now what's interesting is RIA Biz discovered the raise by reading the fine print of the firm's ADV that they filed with the SEC. Good job, RIA Biz. Now, by accepting this capital from RIA clients, Zoe acknowledged to the SEC that this is a conflict of interest, because basically their business model as a lead gen firm is to provide leads to RIAs. And if a bunch of the biggest RIAs in the country now funding you, how can you prove to us that you're not just funneling the best clients to them? So that's going to be an issue for every new client, every existing client. Say, hey, well, you got Mariner now backing you. I want you to show me that your algorithm is going to be honest. So that's something that's a double-edged sword. One, they got great backing, great seal of approval from these firms that their referral process works and is very successful, versus, hey, why should we work with you when these guys own you? A lot of things for Zoe to work out, a lot of issues, a lot of marketing and sales and messaging that they need to work on, as well as how they're going to sell this this new RIA platform that's now both competing with their clients as well. So that's one thing you don't want to do if you can help it, is don't compete with your clients. So we'll see how this goes. If you want to learn more about Zoe Financial, go to the website at zoefin, zoefin.com. Okay, our third story. Bridge FT launches WealthTech as a service platform. I found this to be really interesting news, considering how much work we're doing in Ezra Group on integrations, APIs, integration scoring. So WealthTech as a service platform from Bridge FT. Now, Bridge FT was launched back in 2016. They originally called Bridge Financial Technology, and they were a portfolio management software company for small RIAs. Now, they originally built their software on top of the Fiserv APL platform that's now at InvestCloud. So that was their core platform, and they built some user interface on top of that. They were targeting small RIAs. They got a little bit of traction, and then they started building out some of their own technology around performance reporting and billing, which was called Atlas. And I think their goal was to be a low-cost alternative to firms like Orion. They got to about 250 clients, but never really got enough traction on the platform to really make it. In February 2022, they hired Joe Stenzlin as the CEO. Joe's got a long history in the industry. We overlapped a little bit in terms of being competitors back when I was still working at ADP back in the 90s. When Joe was working at Thomson Reuters, he launched the Thomson One market data platform. I was working at ADP brokerage at the time, and we had our own market data platform that competed with Thomson One. Joe then went to SciVantage. He was head of product and head of sales. He was there 13 years. SciVantage had some interesting products. They had an investor trading portal that was very popular called WealthScope, sold to a lot of mid-sized broker-dealers and regional banks. And they also had a product called Maxit for cost-basis reporting. He was there 13 years until Refinitiv bought SciVantage in 2020. Then Joe became head of digital investor at Refinitiv, and then Feb 2022, hired as CEO at Bridge FT. So Joe looked at the business with a critical eye and said, look, the wealth, the performance reporting, fee billing part really isn't growing. There's too much competition, but we've got some great APIs. And let's really go all in on becoming that type of company, which I think is a great idea. WealthTech API is a company they're calling WealthTech as a service platform. According to the press release, they aim to offer a single open API combining trade-ready data from multiple custodians, as well as analytics and other applications that are powered by the data. That's the important part for me, the other applications and the analytics. Because there are a lot of APIs out there. A lot of the bigger firms have APIs. But when you get to the analytics and the other applications, that's where things start to get interesting. They aim to be an infrastructure provider for a variety of firms. Great. We need that. We need more companies that do that type of thing. Now, we are seeing some of the other bigger players also announcing similar initiatives. Orion announced their partnership with Amazon, moving all their data onto their Redshift platform and opening up their data via APIs. So that's going to be a big move for them. And Envestnet also announced their own data application, data analytics platform. I think it's called the Wealth Data Platform, which we know a lot about. And they're partnering with FNZ, as I mentioned in the earlier article, about to launch that in overseas markets. So there's more and more competition around these open APIs, open data platforms. So we would love any more vendors coming in. We need more doing this. Another comment, as we make this transition to enterprise beyond just the RIA market, so they're moving beyond RIAs, we have a number of firms looking at TAMPs and investment product distribution players and other large firms. That's great. It's a really great way to do that. It's just too much competition in the RIA market for portfolio management, reporting, billing, all these very core applications that become commodities. It's very hard to make money. There's just too many firms out there. So they're going to be offering the trade-ready accurate data from multiple custodians through a single API, including Schwab, TD Ameritrade, now the same, Fidelity, Pershing, Shareholder Services Group, and as well as others. Now, another interesting point, they mentioned they're going to be doing integrations with account aggregation providers, Plaid for other types of feeds. I like to see other aggregation providers and become an aggregator of aggregators. If I could connect to Bridge FT and get an aggregated feed from Plaid, Plaid/Quovo and Yodlee and by all accounts and Accumulate and other types of aggregator, and you could bring me all that data into one place and then clean it up a bit, show me which vendors had the best data from which particular financial institutions. That would be also really useful. There was some buzzword bingo going on in the press release. So while I do like this idea, there's some things we want to just cut through some of the jargon. This WealthTech API represents the first platform to deliver trade-ready, accurate data from multiple custodians through a single API. No, it's not the first platform doing that. All the major vendors who are multi-custodial wealth platforms have data from a single API. Now, they may not have all the data. In fact, they probably have a very small subset of their data, which they're expanding, right? There's more and more data being made available all the time. And we definitely have some issues with some of the vendors not offering enough of the custodial data through their APIs, but not the first platform to do this. We're happy that they're doing it. Let's see, another thing from the press release: removes virtually all need for manual recon. No, the word virtually jumps out at me. There's still going to be a lot of recon. Now, if they can automate it, we always like automating recon. Out of the decades of our experience here, recon is just always a major thorn in the side of everybody when it comes to managed accounts. There's always some issues going on with recon. Every vendor has a recon tool that tries to automate it, and there's always problems. So maybe for basic accounts, they can automate a lot of the recon, but when you get to things like SMAs, the managers want their own data for recon, and especially UMAs, that's a lot more complicated. You're not going to eliminate all the manual recon for a UMA. You require data from the wealth platform for sleeve tagging, sleeve performance, sleeve netting. Billing attribution is a problem, filtering out dividends and interests, handling ACATs, money journaling in and out of accounts. There's so many other issues. But if they can get rid of 80% of the manual recon, I'd be very happy to see that. They're providing data enrichment to deliver powerful performance calculations, insights, and analytics across all accounts, no matter the source. Also good stuff. I think this type of service, this WealthTech as a service, would be great for startups. So firms that are coming into the space and need to scale quickly and don't want to have to build all this connectivity to custodians. And especially, we've done this a number of times for firms. All the files, the custodial files that come in, the amount of data that you have to worry about, the amount of different security types, especially when you get into bonds and preferred stock and things like that, having to deal with it, and the corporate actions. Well, I mean, just looking at corporate actions takes a long time to just understand and build that out and make sure you're handling it properly. So if they can do all that, that opens up a lot of opportunities for firms to jump into our space, offering innovative solutions that they can bring up and not have to worry about how the custodial data gets in. So love to see what they're doing at Bridge FT. And story number 4 in our news: Alois Perker launches Perker Partners. For those of you who don't know Alois Perker, he is a fixture in the industry, an influencer in wealth management technology. He spent 16 years eventually as the director of research for wealth management at Ezra Group. He was there for 16 years, and starting last month, he launched his own company called Perker Partners. The mission is, you can look him up on LinkedIn, but his mission is providing focused strategic advice and thought leadership on current themes relating to business and technology innovation, support decision makers at wealth management firms, wealth tech, startup, and PE/VC firms through a flexible, ongoing engagement model, and act as a platform for dialogue for the various parties involved. So Alois is a good friend. I followed his career. We've met at many events, and we've spoken on panels together. I'm always reading his stuff. He's very insightful. He always has a good take on the industry. You can learn more about his new company at Perker Partners. That's PIRKER partners.com. And you can email him at alois@perkerpartners.com. And his name, Alois, is spelled ALOIS. Here's to you, Alois. Congrats on all the best on your new endeavor. Next story, number 5, is how Advisor 360's first acquisition could expand its reach and offering. This article you can find in Financial Advisor magazine, fa-mag.com. broker-dealer Commonwealth Financial Network built their own technology, their own wealth platform. It took them many years to do so. I think over 20 years they spent building that out, and it worked so well for them. All their advisors and all their assets were on their own custom platform. They decided to spin it out as its own subsidiary, an independent company, which they called Advisor 360. They spun it out in 2019. The company's done reasonably well. They signed another big client, Mass Mutual, who put 7,500 advisors on the platform. And they've recently made their first acquisition of Agreement Express. So this is an interesting selection. It's probably not the firm that I would have chosen. And also some of the news on this is unusual when they're announcing, why they bought them or what the purchase was. Because they're saying things like, we were buying the assets of the firm. Like they bought the assets of Agreement Express. I'm not sure what that means. They're not buying the clients. Why would you word it that way? So that sounds like legalese for something. They acquired the digital onboarding technology and related wealth management assets. It's just a strange way to word a press release. So I'm a little concerned about that. I'm also concerned about why they would acquire this particular company if they're looking for onboarding technology. And we've done a lot of reviews of basically anything in the Keytos Ezra Group map. Any of the 40 categories, we've probably done a review of the tech in our research. And when it comes to account onboarding technology, Agreement Express technology never really impressed us. It was mainly built, at the time, it was built on top of Google. There was some sort of Google tech that Advisor 360, Agreement Express built their platform on top of. And we weren't really impressed with how they did it. They'd gotten some good traction with a lot of smaller RIAs. They never really could make the leap to larger firms. So why they bought them? I hope they got a really good deal. I'm hoping that they did, and maybe they can figure out some way to take advantage of this. But just seems an unusual selection from Advisor 360, considering the breadth and depth of their platform. Why they would choose this particular company to buy. According to the press release, we're thrilled that this business is now part of one of wealth management industry's largest providers of integrated technology solutions, said Dave O'Brien, CEO of Agreement Express. There's lots of opportunities around for acquiring interesting onboarding technology and why you would do it. I mean, we've done a lot of RFPs for these types of things, and some of the areas we look for is flexibility in the underlying technology, how usable it is, how well it integrates, of course, with our Ezra Group integration score. We always want to know how well these firms integrate. And just bringing custodial data isn't really much of an integration because most of it's flat files. So we don't really include that much of that as in terms of the strength and depth of an integration. We'd want to see their tools integrating with other platforms. So be more of a workflow environment. So when you've got, like we were talking earlier about FNZ buying Appway. Appway has a very strong workflow engine. Of course, they're not in the same category as Agreement Express in terms of the client base, right? They're looking at much larger firms, but it's the same type of functionality: account opening, workflow, moving data between different systems in an organization, from the custodians to you might start in the CRM, sending data to the custodian, bringing it back, sending it to compliance. There's a whole workflow involved when you're opening up accounts, and being able to manage that, orchestrate, we call the orchestration layer. We want to look for tools and technology that enable clients to modify that orchestration layer. DocuPace has got a good product there when it comes to new account onboarding, orchestration, supporting multiple custodians, supporting multiple accounts in the same envelope, or so you can open up many different kinds of accounts at the same time. So Agreement Express never really had any of those because they were really working with much smaller firms. So this is a strange one for us, not really sure. We'll wait to see how things shake out and where Advisor 360 deploys Agreement Express's technology. Okay, next story. Story number 6. Asset Map partners with Cetera to empower financial professionals with leading advice engagement experience. You can find this article a couple places. One is wealthmanagement.com in their Wealth Stack Roundup. You can find it on Barron's. And you can also find it, of course, on Asset Map's own website. So what are we doing here? We're talking about partnership with Cetera. Cetera is one of the largest independent broker-dealers in the country with over $300 billion in assets under administration. Of course, Cetera also has a number of subsidiary broker-dealers that they've built up over the years. And AssetMap, you can check them out at asset-map.com, is what they're calling financial advice engagement. So I've always been impressed with the way it was built. CEO and founder Adam Holt built AssetMap as a data visualization tool. It shows all of a client's assets, investments, expenses, insurance, everything all on one page. So it's really nice. I mean, of course, you could build it by hand in PowerPoint, but AssetMap automates that whole process, and it brings in data, has integrations with a lot of other tools, which is CRM, with financial planning tools, and it allows the advisor to present this information in a much more friendlier way and a visual way that I think a lot of clients appreciate, a lot of clients get right away versus 40, 50, 100-page detailed financial plan with lots of complicated charts and graphs. So AssetMap has really taken off over the years. Many thousands of advisors are using it. I think they've got over some numbers. 1.25 million clients have used. Advisors have used it with 1.25 million clients. 1.5 trillion in financial instruments have passed through the platform, and they launched a new product called Discovery, which is data gathering. So it automates the data gathering process and feeding that into their system. They also launched another product called Signals, which alerts advisors different risk events that occur, and they have target maps that bring some goal-based financial conversation. So it started out as a very complementary application to financial planning tools. It's grown over the years into almost its own pseudo financial planning tool. Although I still think a lot of advisors who are using it still use it in pairing it with one of the big financial planning platforms, but you could almost use it as a planning tool for clients maybe have not such a complex financial life. So this partnership with Cetera makes it one of the biggest clients, maybe their biggest client. And Cetera has over 8,000 advisors who all have access to AssetMap. So it's a big deal for AssetMap to launch this partnership with Cetera. They've got a lot of, and they started out very small, focusing on individual RIAs, and worked their way up over the years to some of the largest broker-dealers, like Equitable, AXA Equitable uses AssetMap, lots of bigger ones using it, and now Cetera. So it's definitely something you should take a look at. You can check them out at asset-map.com. And next up in the news, we have story number 7. Private Advisor Group introduces the Wealth Suite investment platform. Private Advisor Group, one of the largest and fastest growing independent wealth management firms in the country, has introduced Wealth Suite, a new investment management platform. Exclusive to its network of over 750 financial advisors, the platform aims to drive efficiency for advisors and an improved investor experience. Here at Ezra Group, we are always excited when we see a new platform, broker-dealer platform or RIA platform come out. So we were very interested to see Wealth Suite, and I had a chance to chat with Private Advisor Group's new CEO, Frank Smith, about it. Sounds like a great platform. It is built on Orion Advisor platform, which they signed a deal with them in 2019 to be their wealth management technology. And it is a sort of a blended wealth platform / TAMP platform available for their advisors. There's investment strategists from BlackRock, Fidelity, Orion, of course, and WisdomTree, who are providing the strategies and investment capabilities and models. It's a multi-custodial platform, of course, as Orion is, with a bespoke mutual fund ETF and blended mutual fund ETF model portfolios, along with custom indexing and tax-optimized solutions delivered through an SMA structure. The last year was a great year for Private Advisor Group. They brought in over $4.4 billion in newly affiliated AUM in 2022. So it's a good deal. So when we look at these types of platforms, we compare them with other platforms that are similar, usually broker-dealer platforms, which are looking more like just really big RIAs. Anyway, look at our LPL ClientWorks. Cetera has their platform called AdvisorWorks. Commonwealth Financial has Advisor 360, Client 360, which we talked about Advisor 360 earlier. Ameriprise has their own platform, and these platforms have a mix of capabilities. Usually they're of course, full featured and end to end. Some pull in different outside applications. Some have different levels of capabilities that they built proprietary, from all proprietary like Commonwealth to a mix like LPL, where they use vendors on the back end for things like UMA management and portfolio accounting. Then they'll build their own interfaces and other types of tools on top. Ameriprise, for example, built their own CRM, which none of those other vendors have done. So everyone's trying to do it a little bit differently. And when we analyze these type of capabilities, whether it's a broker-dealer or an RIA custom platform, we usually break it down to client experience, advisor experience, and then the underlying wealth management technology. So we evaluate the portal, client portal, advisor portal. We look at digital account opening, how well that works, how well it's integrated, how well the data is collected. We look at new advisor onboarding, as well as new client onboarding. We look at the practice management technology. Can we do benchmarking? What type of other tech capabilities do they offer? How tightly integrated are they? Home pages, third-party applications, common task workflows. These are all the things that we look at when we're evaluating these types of platforms. So we haven't done a full evaluation on the private advisor group platform yet, but since it's based on Orion, we know pretty much what it's going to be. But it's always interesting to see how these different firms decide to do these things and decide to bring these capabilities in-house slowly, or build more bespoke capabilities for their teams and for their advisors. It gives them a little bit of a benefit, right? Because I've heard one broker-dealer, one very large RIA aggregator make these comments like, we're all trading the same advisors back and forth. So all the advisors know what the different capabilities are of the technology platforms, and they're becoming a bigger and bigger part of their decision-making process. Besides just payouts and other perks, they're looking at the technology. So if they're looking at between LPL, Cetera, Commonwealth, Ameriprise, or some very large RIAs like a private advisor group or a Mariner or other firms, they're going to look at the technology and see, well, is this going to help me grow? Will this help me scale? So interesting to see how private advisor group is doing, and looking forward to seeing other large, fast-growing independent wealth management firms also launch their own bespoke platforms. Every one of our news episodes includes a quick update on the Keatsis Ezra Group Advisor Tech Map. You can find the latest version of the map at keatsis.com/fintechmap. This month, we've got a couple of different changes. We have a couple additions to the map. A company called Fin Compliance, that's FIN compliance.io is their website, which is an RIA compliance consultancy and software company. They've got a combination of compliance technology solutions for advisors. They also provide these solutions for insurance agents, solicitors, private funds, and FinServ vendors as well. They have a compliance portal. They've got a decent technology suite. You can check them out at fincompliance.io, and they're in the compliance category. Another vendor added to the map is called thinklegacy.com, think-legacy.com. They are, as the name implies, they provide estate planning software. So for financial advisors that are doing estate plans, you can take a look at think-legacy.com. They've got some interesting tools to help you manage your clients across the generations, do discovery, provide them with reporting. They've got some training as well as coaching at think-legacy.com. So they're in the financial planning, specialized financial planning category under legacy. There are some removals this month. We're removing Trading Front. Trading Front has terminated operations. They weren't around for very long, and now they're gone. So say goodbye to that online robo trading platform that was enabling advisors to deliver solutions, digitally enabled solutions for their clients. That just doesn't seem like there's much available work for these firms. They keep coming up with these very generic, very commoditized platforms, and they just don't seem to work. In other news, if you are a vendor that provides CRM overlay, we get a lot of calls from CRM overlay vendors and asking to be moved into the CRM category. And I don't think that's a good idea for you. You really want to be in the overlay category. First of all, you are an overlay. If you don't build your own CRM technology, if you're building on top of Salesforce or Microsoft Dynamics, you're an overlay. It doesn't matter how much additional capabilities you build on top, you're still an overlay. It still requires a Salesforce or Microsoft Dynamics license to use your software, that means you're an overlay. And it's good to be an overlay. If I'm a Salesforce or Dynamics customer and I want additional capabilities, I'm going to look for an overlay. I'm not going to look for a full featured CRM that I have to replace my Salesforce or Dynamics with. So embrace the overlay. It's good for you. We're always looking at different categories to try to enhance the information available as vendors change. Some come in, some are leaving, or capabilities change. We're always looking at, Michael and I looking at how to make the map more useful. So we always look to tweak the categories. So one thing we're doing, another move is the category we created is the advice engagement category, which sort of was a Swiss Army knife category, or I was calling it the junk drawer category when I interviewed Adam Holt from Asset Map. We were just kind of putting things in there that we didn't know where else to put them. So we created the advice engagement category. But there's more and more firms that are vendors that are bringing new capabilities that really feel like advice engagement. Elements is one. We're moving it from light financial planning into advice engagement as they have pivoted away from light financial planning, more towards personal wellness and ways to engage clients, ways to communicate better with clients. We're probably going to be eliminating the plan monitoring category. Pardon me, I can't speak. And all those vendors are going to be going into advice engagement. I think there was only 2 or 3 vendors in plan monitoring, and Hubbly was in there. I don't know why. They're not really plan monitoring. They're more of a workflow tool. But My Plan, Map, and Nudge are moving into advice engagement, and we're getting rid of the plan monitoring category, which is good because we're running out of space on the map. So the more space we can free up by getting rid of a category, it actually does give us a little bit more room to expand in other areas. So that's another change. And there's going to be a new category in the February map called Advisor Data Warehousing. As you heard in an earlier story, a company, Bridge FT, with their WealthTech as a service, they are going into the Advisor Data Warehousing category, as well as Iskowitz, which is currently in the CRM overlay category. But I think we're going to add another logo for them because these are applications you can buy standalone. So if you have a separate piece of software that you sell standalone that you don't need to buy the core platform with, we'll consider putting another logo on the map for you in that category. So please let us know. So Skyence will have one logo under CRM overlay because they're built on top of Salesforce, and another one in the new category, Advisor Data Warehousing, and a new vendor, Mile Marker, will also be in Advisor Data Warehousing. Those are all the changes for the map. Now, the Ezra Group WealthTech Integration Score, which coordinates with the Ezra Group, the Kitz's Ezra map, because as they add new things to the map, we have to add those same vendors to our scoring. So when a new vendor comes in, like Fin Compliance or Think Legacy, we're going to look at them, contact the vendor, check their website, and gather all the information we can about their integration capabilities, feed that into our algorithm, and it's going to generate a score. So we've got a score available for every vendor on the map, or at least 3/4 of them on the map on our website, EzraGroupLLC.com, which you can find from our homepage. If there's a menu item for what we do, and you click on that, and you click on WealthTech Integration Score, and you can look up any score you like. We are also looking to make the WealthTech score more useful, more accurate. So we're constantly tweaking it a little bit as we also get feedback from vendors and from clients that are using the scores. And one thing we did that's coming out this month is an update to the scoring methodology. There'll be an email that'll go out with more details, but we're changing, slightly tweaking breadth, depth, and usability. In depth, we're modifying the way we calculate that score and giving a higher score to firms that have deeper integrations. So they get a little bit more of a benefit. So if you've got 10 integrations and they're all level 5, you're going to get an extra benefit than if you had 10 integrations, they're all level 1. So, or if you have 5 level 5s and 5 level 1s, you would get more of a benefit there. We don't want to penalize you because you created a bunch of 1 integrations without acknowledging you have these 5 very, very deep, very robust integrations. So we tweaked the scoring there. So you're going to see some of the scores change. I think about 100 of the scores went up, about 100 of the scores went down, some in the middle, based on these new changes. We also expanded the questions we ask around usability, and those are focused on APIs, your documentation, your authentication software. So we're asking a lot more questions to gather more information around those capabilities, how well these vendors, not just saying, oh, we've got APIs. Okay, great. Well, how well do they work? What support do you have for developers? How much do you have sample source code? Do you have documentation? Is there a sandbox for developers to log into? Things like that. So you really can look at our score and know that a higher scoring vendor has a way more robust capability than a low scoring vendor. All right, before I wrap, I just want to say that this news episode is dedicated to the memory of my good friend and colleague, Gavin Spitzner. Unfortunately, Gavin Spitzner lost his battle with AML leukemia just a couple days ago. I have to say it was a huge shock. I've known Gavin I looked it up. We met in 2011. I didn't realize exactly what year it was, so we've known each other for quite some time. When we ran into each other a lot in the beginning at conferences and different meetings. And then when Gavin left, he was working at Prudential when they were purchased by Prudential's wealth management business, and they were purchased by Envestnet. And then he went off on his own after 2 years at Envestnet. And then we spent a lot more time interacting since we're both consultants. And Gavin and I collaborated on a lot of things. He worked with us on a number of projects. He was always, obviously he's one of the smartest people in the industry, so we loved having him on our projects, but also a super nice person. And we spent a lot of time on the road together at conferences. I shared some stuff online about some of the time we spent together. There's just too many to know. And, it really gives you, it kind of grounds you in realizing what life's about when you see someone who you knew so well. And 1 minute they're here and they're fine. Then they announce they've got this terrible disease. And before you know it, they're gone. It's just really a horrible thing. I just wanted to dedicate this episode to Gavin's memory. Please go online. If you knew Gavin, I'm sure you've already done this, but if you don't, go check out RIA Biz. Has a great article about him from Lyson Breen, who wrote a great, it's a fantastic, I hate to use the word obituary, but it's a summary of his life. I think he did a really good job encapsulating what it's like. If you didn't know Gavin, reading this, I think will give you a good understanding of who he was as a person. And then Josh Brown on his website, he did on LinkedIn, find it on his the Reform Broker. He wrote up a bit of a summary about his time understanding Gavin. A couple of the media in our industry also put out some information about Gavin. So please check it out. And thanks, Gavin, wherever you are, we're thinking about you, man. All right, so that's the end of this episode of the WealthTech Today podcast. Thanks for listening. Please go to our website, EzraGroupLLC.com. Go to the bottom of the homepage and sign up for our newsletter. Once a month, you'll receive an email chock full of wealth management goodness, news, information, analysis. You will not be disappointed. Thanks for listening, and talk to you all again next